Dear students, we welcome you to our classes. In this session, we will be dealing with few MCQ and their answers. In this lesson, you will have to note, after every questions, we have introduced a pause slide. The idea of that is if the students show this, they can pause their laptop, phone, etc. and try to answer the questions themselves. And later they can resume it and check with our answers and explanation. Having said that, we will go to the first question now. A business suspense account appears as follows. They are given the details. Salaries on debit side, opening balance, credit, sales, credit, and in balances. It means the suspense account have been created. It is clear. And then a few statements are given. Which statements are correct? 1, the salaries account had been overcast by 150. The sales account had been overcast by 50. The debit had been 100 less than the total credits in the trial balance. So you'll have to choose. Now, we take this opportunity to learn something about a suspense account. Suspense account is created when you are not sure, unsure of a detail of an account until it is properly determined. They make a temporary account. That account is known as suspense account. This is created for various reasons. But in this particular context, we are talking about suspense account created for trial balance difference. That is usually if we make our double entries correct, both debit and credit side of all total of accounts should tally. Debit side should be equal to credit side sum total. But sometimes it may not due to various errors and mistakes. So until the mistakes are found, the balance, depending on whether it is debit side is more or credit side is more, the suspense account is created and it is put to the opposite account. Suppose we say if the debit side is more, it is put to the credit side. If the credit side is more, it is put to the debit side and they start that account. Once they find all the errors, it will be clear. Suppose we say in a circumstances where it is not totally clear, partially clear, or not cleared at all, still if you want to proceed with the accounts, so this suspense account will have to be placed in some place. You know that the usual options are, there are only five accounts. That is expense, income, assets, liabilities, equity. So where to put these balances? Now, due to prudence concept, what they do is they don't put this into either income or expenditure account. In that case, it will get written off. But instead of that, till the correct details are found, they will leave it. If the debit balance, if it is a debit balance account, as account receivable and will be shown as current asset. If the credit balance is more, it will be shown as accounts payable and that will be in the current liability. Now also you'll have to remember, this is the only account where you start the account without a double entry. Every account, you know that every journal entry has got double entry. The only exception is suspense account, where depending on the difference, it will be a single entry account, but it is a temporary account. Okay, now generally you know that the errors that we will find in balancing the trial balance is listed here. We are not supposed to go into the details of this at this stage. Usually these are prepared actually for our Zoom classes where we go into lengthy details. explaining these things. Now our main object is to give you a small introduction and then go back to the answers. So now we'll go to now there is a normal golden rule. You all know it. It should be in the minds very clearly, in the minds of the students. So therefore, anytime, any questions on accountancy, they can handle it. Now, this is just to recapitulate, you all know about it. It's not our idea how to teach this. Now we'll go back to the question where they say the salary account have been overcast by 150. So what they mean is 150 is more. Salaries account is what account? It is an expenditure account. Now you go back to your golden rule account where you will say if the expense is to be decreased. Now it is already more by 150. So it has to be decreased, means it should be a credit entry in the salaries account, in the expenditure account. If it is credit in the salaries account, it should be debit in the suspense account. So this statement is correct. The next statement is the sales account have been overcast by 50. Sales account is an income account. So if the income account is more, in order to make it income account, which is a revenue account. So if you want to, if that account is more, you have to reduce. To reduce, what we have to do is debit that account. If you debit that, then the suspense account will have to be credited, which is done here. So this is also correct. Now the next statement is the total debit had been 100 less. It means credit side is more in the trial balance. Now, have we already explained to you, if the credit side is more, you will start the trial balance, the suspense account with the debit balance. If the debit side is more, you will start. So this statement, therefore, is wrong. So only the first two statements are correct, which is A. Now, let's go to the next question, which goes as, in a statement of profit and loss of carriage outward of 5,000 have been treated as carriage inward. Carriage inward of 3,000 have been treated as carriage outward. What effect do these errors have on profit? They have given what will happen to the gross profit, what will happen to the net profit. Various options are given. So this is a trading account question. Okay, now we will first give the opportunity for the students to attempt. Now we'll come back to the answers. Before that, we will take the opportunity to learn something. Generally, a trading account would look like this. Okay, you all have seen it, you all would have done it over and over again. Now you see that there's a thing called direct expenditure. What is a direct expenditure? An expenditure which is necessary or incurred to bring the saleable item to the saleable condition or selling place. So carriage inward means bringing the stock into the stores. Carriage outward means that is after selling, sending it out. It can be for various other reasons, various other transports. So having said this, now you know that the correct place for a direct expenditure is a trading account. Here there is a small further slide. Just to first statement itself, we say trading account is only a part of profit and loss account. It is not a separate account at all. The reason why we make trading account without putting everything in one format, in order to find out what is the real trading profit or the business profit is. Therefore, we usually use this trading account. So direct expenses are taken into trading account as I explained to you earlier, right? And the direct expenses again further explained here, all incurred in bringing the stock to a saleable condition or a selling place. Right, now these are explained here. Now we will go back to the question, right? So if you keep this trading account slide in your mind, now we'll go back to the question where they say a carriage outward. That means after the sales or for some other reason, some transport have been incurred, but that was shown as carriage inward. Now what happens is in this account, now if you see an amount of 5,000 have been put here, which is not supposed to be here. So if you put 5,000 here, the total of this will be more. If it is more, this will become less. It is understood. No? When we put 5,000 here, then this total will become more. Therefore, the balancing figure will have to be less. So it means gross profit will become less. If you go to our options, right, there are two places where they say understated. So understated, there are two places. So therefore, the option A and B is out. Now we go back to the other question. Other answer is, okay, if we correct it, then the trading account will show a higher gross profit. Now the next one is carriage inward. 3,000 has been treated as carriage out. What they did is an expenditure which is to be shown here have been shown in the profit and loss account, not here, not as a direct expenditure. Therefore, in this particular, only if you take this transaction, gross profit is more because the expenditure is less. Gross profit is more by 3,000. So here, two situations. One is gross profit is less by 5,000. Other one is gross profit is more by 3,000. The net effect is 2,000. Therefore, this could be the option. Now we'll have to see the position of the profit and loss account. If you see this account, as we explained, it's only a part of profit and loss account. So the whole thing is finally will come to only one profit figure. In between, even though we have found the gross profit, trading profit, ultimately it will be the only one profit, which is the net profit or the profit for the year, what we usually say. So suppose you say in a profit and loss account, say an expenditure have been written on line 5. If it is written on say line 7, will it make any difference? It won't make. So similarly, so changing the places of carriage inward and outward will not have no effect on the profit and loss account because it's only the shifting of the places. So therefore it will have no effect. The answer should be C. We'll go to the next question. A bank statement shows a credit balance of 1,500, a payment of 500 and a receipt of 1,050 were included in the cash book but have not appeared on the bank statement. Bank interest payable of 1,100 have been correctly recorded in the cash book, but due to a bank error had been recorded in the bank statement as 1,000. Which is the correct cash book balance? This is the question. Students may try. As you all already understood, this is a question regarding bank reconciliation statement. BSR, sorry, BRS. But we again take this opportunity to learn something about bank reconciliation. Okay. This again the notes prepared for our mainstream classes, but we'll just briefly see. Now, usually the bank balances. Now, as we maintain in our book regarding the bank transaction, bank in their books will have an account for our company. So if both are done correctly, logically it should agree, but generally it will not agree. It cannot agree because of the nature of the transaction between bank and the company that we'll explain. So there will be a difference. So in order to reconcile, in order to see the difference between each of these things, we make a statement which is known as bank reconciliation statement. Why bank and cash book, even both of them are correct. We say, for an example, the cash book balance is free of errors and the bank statement also are free of errors. Still, there can be chances where it may not agree. The reason is, as you all know, now say for an example, we write a check. We issue a check. That check, once we given to a receiver or a customer, we write it and then we immediately enter it in our books. But till that check goes to the bank, bank is unaware. They will not know. So therefore, they will be totally blind regarding that check. So their balances will remain higher. So similarly, when you do deposit, we assume that we can't otherwise keep a track also. We assume that it is realized, but in fact, it may take time to realize. Because of this timing difference, anyway, the cash book balance and the bank balances mostly will differ. That is why we prepare the bank reconciliation statements. There are other reasons also. Now, just to see, now we are not going to go into details. These are meant for our normal regular classes. Just to give you some brief idea, we dealt it. Now we go back to the thing. Here also, there are now, as we already explained to you this part of it, the company knows certain thing first, but the bank doesn't know. It will take longer time for them to know. Similarly, there are certain entries which bank knows first, but then the company will come to know when they check the bank statement. Otherwise, the bank, if they notify, they will know. Things regarding standing order, direct debits, bank charges. This at this stage, we are not going to go into the detail of this. Now we will go back to our question. Where the bank statement says, not the book, bank statement says a credit balance of 1,500. So as you all know, in our book, okay, as shown in this, just only look at the highlighted area, not the other areas, where the cash book balance, if the bank statements, if it's a credit balance as per the bank, then it should be, in our case, it's a debit balance. Right. The next one is, they say there had been a receipt or a deposit of 1,250, which has not come to the bank statement. So therefore, our cash book balance will have to be higher. So we'll go back to here, see, receipt or deposit yet to realize or unrealized is 1,250. Right. Similarly, there is a payment of 500, which is bank is unaware as per the question. So these are unpresented checks, which is 500, which will be less. And also, they say that there is another detail given here. The bank, the company has entered the bank interest payable, correct, but the bank has not. Therefore, the bank balance will be less, and then the bank balance will be more, and the company balance will be less. So therefore, you'll have to deduct that as well. So in this question, it is deducted here. So the correct or corrected cash book balance will have to be 2,150. So this will serve the purpose to answer this question. But in our learning process, we want to learn something little more for the benefit of the students. Now here there is something prepared on the white side. Now what we have really done in this highlighted area is only a calculation. This is very similar to a bank reconciliation statement, but this is not really a bank reconciliation statement. Now, if you see here, now what we have done here is the bank has understated the interest payable by 100. Instead of 1,100, they have, in the question they showed us, they have mentioned, they have entered by error as 1,000. So they have understated by, the bank has understated by 100. So the bank balance will have to be corrected if you are doing a reconciliation. Then their balance will be 1,400. So with that only you will have to make your reconciliation. This is a reconciliation, even though this is not the question, this is not the answer expected out of that question. For learning processes, this part which is shown here is the correct reconciliation part. Okay, having said that, we'll move on to the next question. In which book of prime entry is the contra between the sales ledger control account and the purchase ledger control account recorded? 4 prime entry books are given here. Before we answer this question, we take this opportunity to learn something. Here we are talking about sales ledger control account or total account, purchase ledger control account, and a contra between. Now these are a few things which we'll have to learn. Maybe you already have studied, but just to recapitulate. Now how a sales ledger control account works. Okay, there's a thing called sales day book. The slide is not very clear. You can take the next one. Purchase day book. Say purchase. Similarly, in concept, it is the same thing. Okay, purchase journal or a purchase day book may appear like this. Leave alone the other details. Now the name of the supplier is entered. When you buy things on credit, okay, the amount spent is entered there without making a double entry. You know that the day books are introduced in order to reduce the workload. So otherwise you will have to, every entry you will have to say debit purchases account, credit supply, debit purchases account, credit supplier B. Like this, we will have to keep on doing it. The workload would be more, therefore we reduce it. So we write it in a single column account. Now, as you see, there's only one column for the amount. So there we write all the, whatever the sales we do, we write those things. And at the end of the period, we total them and we make a journal entry. That is debiting the purchases account, crediting the creditors or the creditors control account. The journal, the double entries made there. These individual amounts are posted, as you see, into the purchase ledger. They have posted. Ledger folios are given here. So this is how it is done. Now, having said that, the same way it will be for the sales ledger also. Sales day book also, it will be the same thing. Now, there is a thing called contra. What is this contra is about? Contra means, say for an example, one person usually is a customer. He buys things from us. All the time he buys things from us. Therefore, an account have been maintained for him in the sales control account or the sales ledger account. We keep an account for him. Say mistake, there will be an account for him. But then the same time, this person in another context, he may be a supplier. He can be, he is usually a customer, and also he has another role as a supplier. So we buy things on credit to him. So therefore, there will be an account in the purchase ledger as well. Since he is a customer, there is an account for him in the sales ledger. Since he is a supplier, there is an account for the same person in the purchase ledger. Sometimes what they do is they set off, say we owe him 10,000, he owes us 5,000. So we only receive 5,000 and clear the accounts. But what happens is the 10,000 the 5,000 we receive will go to the sales ledger control account. Therefore, 5,000 will remain. The purchase ledger, because since mostly is a debtor or a customer, the entry will go there. In the purchase ledger, it will just remain. So in order to clear these accounts, what we do is we do entry between. We debit the purchase ledger control account, credit the debtors ledger control account, and we clear the account. This is what this contra is about. Now we'll go back to the question. Again, there is another slide which is usually prepared for the students for our normal Zoom classes, where some brief explanation is given. Sales day book or the sales journal is used only for credit sales. Purchase day book only for credit purchases. Sales return book, purchase return book similarly. Cash book for all cash and bank transaction. Petty cash for small transaction. Now here is the important thing. The journal. All transactions not recorded elsewhere. Now, if you can't enter any of those transactions in any of these books, okay, the ultimate resort is to go to the original, the general journal book. Having said that, now if you handle the question here, which says there is a contra between purchase ledger and a general ledger. So as we have already explained, you all know, okay, it cannot be cash book because cash book only takes the cash transactions, purchase only about the credit purchases, sales ledger only about credit sales. So the contra entry between these two will have to be made in the general journal. So that is the correct answer. I hope you all have understood. Now we'll move on to the next question. The bookkeeper reconciles the control accounts with the sales and purchase ledger. Which errors are identified in display? By reconciling the account, what and what mistakes can be identified? A figure was transposed when copied from the book of prime entry to a personal account. 2. An incorrect amount was entered in the book of prime entry. 3. Total in the book of prime entry was incorrect. 4 transaction was omitted from the book of prime entry. In order to answer this question, part of the details of this question was there when we answered the previous question. Again, we have just prepared your small examples here, working here, for you to understand how this is done. Normally, as we have shown you the day book part of it earlier, right, where you know that how these are entered. So the same thing is repeated here, a day book. It can be either sales day book or purchase day book. Only the sites will differ, but otherwise, in principle, it is the same thing. Say now there are 5 personal accounts is given here. Say if it is a sales day book, these are debtors. Okay, the names of debtors, it is total, as we explained to you, from this sales control account, or the debtors control account will be debited, sales account will be credited with this 4,100. So the same amounts are entered in individual accounts in the debtors ledger or a sales control ledger, say 500, 1,500. So similarly, all these things are entered here. Keep this picture in mind, answering this question. Now I'll go back to the question again. They give you a different situation. A figure was transposed when copy from a book of prime entry. Now, if there is any difference, okay, if there is any difference between this total and the total of all these lists, right, then we will have to find out the reason for the difference. So it will be due to definitely some mistakes. So the mistakes will have to be corrected for the accounts to prepare the correct information or the picture. So there will be a reconciliation necessary to find out what the differences are. Having said that, now we'll go back to the question again, where they say a figure was transposed when copied from a book of prime entry to a personal account. Now, when you say transport, the amount is incorrectly entered. Now we have given an example. Say for an example, the RR, let us say that account RR, 750 is the correct amount, but it was by mistake written as 570. So when you do the totaling of these things, will it agree? No, it will not agree. It will definitely differ. Therefore, by this bookkeeper's exercise to reconcile the account, this will get identified. Number 1 will get identified. Now let us take up the second one. An incorrect amount was entered in the prime entry book. Now let us say this is the prime entry book. Say for an example, this is 450, but really this is 650. By mistake, the person who wrote the day book wrote it as 450. That's 450 instead of 650. So quite naturally, the personal account, when it posted also, it will be the wrong amount. Even though the amount is wrong, there will be no difference because it is 450 here, 450 there. So there cannot be a difference. So this mistake will not be identified. So number 2 is not part of the answer. Now the third one, total in the book of prime entry was incorrect. Now look at this one. Instead of 4,100, let us say some other figure. It was totaled as 4,700. In that case, if you list it, because this has no relevance to the listing of these accounts, so these accounts say if it is done correctly, it will be 4,100. Because the totaling here is wrong, it will appear as 4,700. Therefore, there will be a difference between these two accounts. So that will become when the bookkeeper does the reconciliation, it will be noticed. Total in the primary was included. The fourth one, a transaction was omitted from the book of primary. So that again, if you look at it, say there is another entry also to come, but by mistake they have omitted. If they have omitted here, naturally that is omitted from here. So that will not create any difference. So therefore the bookkeeper's reconciliation will not identify this. So therefore the correct answer is 1 and 3, which is C. I hope the students have understood this answer also. In case any of the answers that we have dealt before is not very clear to you all, or you all need further explanation, or you all want to join our Zoom sessions, then in that case, please contact us on these numbers which are given here. If you call us, then we will do the needful for you. At the same time, there is one more thing. We have a YouTube channel called SL Account School. SL, the word SL is important because in the name of Account School, there are so many listings in the YouTube. So it's very difficult to locate a particular one. Therefore, if you put it as SL Account School, only our account will come on the top. So if you can subscribe, you can use it because most of these lessons will be uploaded at least for some time. We will keep it. So if anybody wants to refer it, they can do. So you can inform about this YouTube channel, your friends and anybody, any accounting students, because these are free. Okay, let them also benefit. So you also will get reward for it. And then we kindly request you to publicize this channel, share it, subscribe it, and inform more and more people about it. Thank you for the session. We will meet again in another occasion.